Now, some of you that have a lot of capital, because I've met with hundreds of you by now, and I know some of you are sitting on millions of dollars. So let's say I've got $1 million in my 401k because I've been a great saver, and me and my family have pulled our money together because I got relatives that are not crazy, and we're doing business together. This could be a family business right here. You could set something like this up and say, okay, we're going to sell a call and we're going to sell a put, and we're going to take this money. And let's say that instead of doing 1,200 shares, we're doing 12,000. So we're doing like big boy finance, right? So we're making 8,900 a week on the call that we sell and 10,000 a week on the put that we sell. So we're making $20,000 a week or $80,000 a month on this business. And it doesn't require any work from any of us. It just requires us to study so we know what we're doing and we know how to manage the risk, and also to be very conservative and very patient and very careful, right? And literally, that's a family business that could be started very quickly if you are able to raise the capital to get it done. Okay. So, what else would I say about this? Another little trick, and since we're talking about condors, to make it a full condor. In fact, you know what I'm going to do? I'm not going to do the full condor example with this. I'm going to tell you what it is theoretically, and then I'm going to do another example with another stock so we can actually see it in action in that way. So here, the reason this is not a full condor is because what you did was you sold a call and you sold a put. So just selling a covered call gives you kind of this sort of infinite FOMO kind of thing going on where, if the stock goes up, if it doubles or something crazy, you get none of that, right? But if you want to get a piece of the action if the stock goes up too high, then you could do a call spread. And that's where you sell a call, but then you buy it back. You buy another call that's out further out of the money. You get less revenue, but you get to get back into the game if the stock really goes berserk on you, right? And so actually a stock that I want to analyze in that context is OKLO. OKLO is the superhero of the classroom right now. That's the star because OKLO is that stock we've been talking about for the longest. And I know a lot of you made money on OKLO. I know for a fact a lot of you have thousands of dollars in the stock. So let's play around with OKLO. And I'm going to tell you these are real things that can be done tomorrow. That I'm going to try some of this stuff because OKLO is man, I was so happy when I saw this stock pop up because I know how many of you have been messing around with it. All right, so OKLO, which in case you don't know, OKLO is involved with the small modular reactors and the whole AI thing, right? So that was what brought it to my attention. I heard that Sam Altman was invested in the company, and that's what made me say, okay, I think I want to be involved with this. So right now with OKLO, let's start with the stock price. Okay, so the price of OKLO is $64.70. And that's a big run up, right? Um, that's a big run up, which is a major risk factor because at any moment this stock could turn back into a pumpkin. So if you've made a lot of money, I encourage you to consider protecting your losses, not investing advice, but it's something that I thought about. I said, okay, let me go ahead and buy a bunch of these puts while they're cheap. That way if this stock does drop down to 30 or something, I'm not going to be mad about that, right? So the current price is 64.70. So now we're dealing with a $64 stock. We were last week dealing with a $40 stock or something. Now it's 64. What does that mean? How do we play around with this?